I think investors want to still sort of not own the stock market. And I think that's one of the reasons this is the most hated V-shaped rally really in the last few years.
Tom Lee's calling this the most hated V-shaped rally in years. What does he mean by this? There is $7 trillion on the sideline, which is one of the reasons that Tom Lee is saying this, that there aren't enough people that are yet in the market. And could we possibly keep going up as the great melt up continues here? S&P 500 making new high after new high. If that $7 trillion comes into the market, where are we going? Well, in this video, I'll do my best to break it down for you. And this term here, the most hated V-shaped rally in history or in years, has been used time and time and time again. This is not new. And spoiler alert, every single time that it has been used is in situations like this, where we have a V-shaped recovery, the market doesn't believe, and then we get a wave of liquidity into the market, pushing it to new highs. I'll show you what I mean. If you own Tesla or Apple, I will also be giving you some crucial updates here as we got the liquidity sweep that we wanted on Tesla. Go back and watch my last video. As the Trump versus Elon beef was heating up, seems to be calm once again. I'll admit, I didn't think that would heat up. I thought it was in the past. They are obviously beefing over the big, beautiful bill, which passed the Senate and is now due for a House vote. And Congress is, or the administration is hoping that they pass that before July 4th, which is this Friday. Also, Apple breaking out here. So if you own Apple or Tesla or want to own Apple or Tesla, watch out for crucial updates here. I gave you guys this one in the last video. Check that out here. Told you that if Apple gave us any sort of plan or update with regards to AI, it would play the catch-up game. So is there an opportunity here for Apple to get back to 260 now that we know it is looking at OpenAI and looking at Anthropic to help boost series performance? So stay tuned as I break down the most hated V-shaped rally in history, tell you if there is a lot more juice left, and give you an update on Tesla, Apple, and all of the other stocks that I'm looking at now, where I see opportunities in the market. As I always do, let's get right into it. So first, let's start with the big news, and then we'll get into the trades and the stocks towards the end of the video. But JD Vance saved the Trump bill, and his vote was actually needed because there was a 50-50 tiebreaker, which means that the vice president gets the tiebreaker vote. So he pushed this past the Senate, and it is now on the House, due for a vote before July 4th. If you watch my last video, you'll know that this was a reason that I saw a blow off top continuing, and this bringing an additional liquidity into the market. We'll talk about that when we go over the charts. Now, we had a lot of jobs data come in this week, but the ADP non-farm payrolls shows that the private sector lost 33,000 jobs in June, badly missing expectations for a 100,000 job increase. This is as Microsoft is laying off about 9,000 employees in the latest round. This is one of their biggest layoffs ever. Salesforce now says that AI accounts for 50% of its workload. And we have the unemployment rate coming in on Thursday, July 3rd. It is expected to come in at 4.3%. So if you're watching this after, then we'll know what it came out as. But it is expected to come in at 4.3% now. This is, we're still within the range that we were in for an entire year now, 4.2, 4.3%. But in 2023, we were at 3.5%, and now we see this curling upwards. What do you see here? Every time unemployment starts to curl upwards, well, we get a freaking recession. Now, I still am on board with a recession in 2026 or beyond, maybe 2027, but certainly coming within the next year or two, in my opinion. I've talked about how the stock market rally looks a lot like what we saw in the late 90s before the 2000 bubble. Now, this bubble obviously being AI and not the dot-com bubble. However, it may burst a little differently. My main concern is that we are not really keeping tabs on the amount or the number of jobs that have been lost to AI, and that as AI accelerates exponentially and improves exponentially, that we will see an acceleration of job loss due to AI. And there really isn't any sort of talk about how we're going to handle that. Is AI going to replace every job? The most common job in the United States is related to driving, is some sort of driving job, whether it's delivery driving or transportation, or whether it's Uber driving. That is the most common job in America. So obviously, we're going to get to a point where autonomous vehicles are the norm. what happens to all of those jobs? Where do those workers then find reintegration back into the workforce? I feel like we're not talking about this enough. Now, I can easily see as AI gets better, unemployment will start to tick up. So while I think we are going to get a nice end to the year in the stock market, I do think the next year and the year after is going to be pretty shaky, not only from an unemployment standpoint, which to me is the most important since I care about workers, but also from a yield curve perspective. And we talked about all of the other markers that come with a pre-recession. So when I'm anticipating the Fed to cut 6 or 7 times next year, it's because shit has hit the fan. It's because this has gone up, and the Fed is going to try to correct that by cutting rates, which will then push the 2-year down, and this yield curve will normalize back again where the 10-year is paying more than the 2-year. But at that point, we might already be in some sort of recession because the unemployment is just too high to deal with. However, today we are focusing on what happens in the medium term with regards to the market and where are there opportunities. So I'll stick to that. Now, could the market keep on going higher despite this ridiculous rally here? Yes, in my opinion, it can. We are likely going to get an injection of liquidity due to the loosening financial conditions, the deregulation, and the injection of liquidity from the Trump tax reforms that are likely to be signed, in my opinion. Now, we can also try to determine how the market and the economy is interpreting what's going on right now. You could see here this divergence between the SOFR 1-year rate, let's just call this the short-term rates, and the cyclicals versus defensive stocks. Defensive stocks obviously do better when the market is in a panic or when the market is already in a recession or expecting a recession. But right now we are seeing cyclicals versus defensives rallying, and we are seeing the short-term rate declining. And you can see this separation here, which is signaling that the market is also interpreting this time as an injection of liquidity and loosened financial conditions based on the Trump tax bill, the fact that the tariff talk has really died down, and the projected growth rebound that comes along when the government signs a massive spending bill, printing money like crazy. As we know, this one is expected to add $4 to $5 trillion to the deficit. So that's what we're seeing at the moment, and why, in my opinion, this rally can continue through the end of the year. Would likely spell trouble in a year or two, but that's where we're at. And if you want some proof that the market is no longer scared of the Trump tariffs, as I said before, was it a genius plan to come out and say we're going to charge Vietnam 110% or whatever the initial tariff was, and then dial that back down to 20? If you really wanted a 20% or a 10% tariff on these countries, right? You go crazy, the market panics and reacts negatively. And then once you dial it back and you're like, okay, let's just agree to 20. And the market then says, hooray, that's great news. We thought it was going to be 120, but we're cool with 20. When you initially wanted the 20, call it genius, call it chaos negotiating. Either way, it looks like this is the way that we are going to go with these countries that we're trying to sign tariff deals with, that we're going to go back to an initial reasonable tariff amount. Very curious to see how unemployment comes in. Will it be 4.3%? Will it be more? Will it be less? Very curious to see how this comes in, but I don't think that we are on a good path here as these companies start laying off employees due to AI job replacement. I feel like that's a conversation we just have to have, but I guess we're not.
I think investors want to still sort of not own the stock market. And I think that's one of the reasons this is the most hated V-shaped rally really in the last few years.
Now, what does the most hated rally in the stock market mean? It means that despite widespread negative sentiment and the fact that there's a lot of money on the sidelines, the market still keeps going up. So how often is this, and how often has that been used? And more importantly, when has that been used? So let's take a look at it. June 2020, the most hated rally in history just won't stop. This is by Bloomberg. August 2023, reflections of the most hated rally in 2023. 2017, the most hated rally getting record love. And best of all, 2009, the most hated rally in Wall Street history. Even in 2012, understanding the most hated rally. Do you guys see a freaking pattern here? Every single one of those was a V-shaped recovery where on the bottom, everyone was like, it's going to get worse. Are you dumb? Why are you buying? money on the sidelines. And as of recent times, retail gets in first and then institutions jump on. But in June 2020, for instance, this is when they called it the most hated rally. Look what happened all the way to 2021. February 2023, they called this the most hated rally. Just this little V shape here. They called this the most hated rally ever seen. October 2017, the most hated rally in history. October 2009, the most hated rally ever. Look at what happened since 2009. Oh my God. As a matter of fact, if you just invested every time an article came out saying this is the most hated rally, you could probably make a portfolio just based off that, and it would be a really successful one. All right, let's go on to the stocks. First, I'll talk about Apple and Tesla, and then we'll talk about some other opportunities and give you updates on some of the trades that I've made publicly with you guys and trades that I've made internally. So, looking at Apple, I told you guys that this is coiling really tightly here, and we will likely get an announcement on some sort of partnership or acquisition that Apple is going to make in the AI sector. Apple's a smart company. They're sitting on a massive pile of cash. There is no way that they can go through one more upgrade cycle with really lukewarm reception. iPhone 16 was pretty lukewarm. iPhone 17 is coming out in September. They cannot come out and say, we're working on Apple Intelligence, but buy this iPhone 17 that is no different from the iPhone 16. They have to really try to change the game. Their AI game is very different from a Google or an Amazon or a Meta or a Microsoft, right? Apple is in the hardware business, and they have a very loyal customer base. They need that hardware to be AI compliant. If their hardware doesn't have any sort of AI capabilities, they're really living in the Stone Age. And as I said, AI is accelerating so fast that they have to keep up. They tried with Apple Intelligence. It was a big fail. They dug their heels in the ground and stubbornly said, we're going to actually do this with Apple Intelligence. We're not going to be using any third-party software or any third-party LLMs. And as I expected, Apple came out and said they are going to be using Anthropic or OpenAI to power Siri. Now, I didn't exactly say Anthropic or OpenAI. I actually thought that Apple should buy Perplexity. And while that is still on the table, in my opinion, it is a good sign if Apple uses one of these LLMs that already have much more figured out than Apple. I mean, we've seen this before, right? Apple used to use Google Maps on their initial iPhone. Apple used to use Intel processors before developing their own silicon. In my opinion, it is a lot harder for a company to build a closed loop silicon supply chain and build their own chips than it is to actually develop AI. But they are definitely behind the curve, right? And so they do have to initially partner up with one of these third-party LLMs in the same way that Microsoft did. Microsoft made a huge investment in OpenAI, and they also did implement a lot of OpenAI, but now they have Copilot. So I imagine that's what's going to happen with Apple, right? They're going to use OpenAI, or they're going to use Anthropic. They might acquire Perplexity. Either way, they're going to use it as a starting base, and their very smart and talented workforce is going to build upon that, and they will eventually have their own Apple Intelligence. But they cannot come out with another set of hardware that is non-AI compliant. That's just not on the table. They will be looked at as a dinosaur. So with that announcement, as I suspected, Apple is now catching up to the rest of the AI trade. Now, let me show you how crazy this is. If you look here, June 30th, 11:36 Pacific time is when I sent this out, the alert for Apple. And this is where we were. It had to be half an hour after I sent that we got the first boner candle out of this triangle. Currently sitting on these 175 leaps expiring in December, up 27% on these leaps. Leaps were my preferred method because I do think it might take a while for Apple to get, we're in the middle of a news cycle. So Apple's going to have to keep generating the idea that they are actually serious in the AI space, right? And they have to keep that charade going. I don't want to call it a charade. They have to keep that actual narrative going and show the market that they're serious about it if the stock price is going to continue higher. We already hit, my initial target was around 215. We hit just shy of that. But I do think that Apple can get back to that 250 level depending on how they deal with this. For a safer target, I would say that 225 is really the next target that the market will likely accept without any sort of major tangible moves in the AI space, in my opinion.
You say for the second half, you buy a number of things, small caps, financials, large and regional banks, industrials, Mag 7 and Bitcoin, but also washed out stocks. I want to find out, do you think Apple is one of those washed out stocks? Because Fast Money was talking about it yesterday. I want to play what they said yesterday about it and get your take on it as well.
Yeah, now they're talking about Apple.
So we are thinking you can catch 6, 7, 8% from here. And the setup, to my eye, looks right.
First, is Apple one of these washed out stocks you're talking about? And what do you think of that technical take?
I think patience is going to pay off for Apple. They're going to have an opportunity to look at what kind of AI models work the best for them. And at the end of the day, I think their customers will remain fanatically loyal. And so if we're starting to see higher highs and higher lows, I wouldn't be surprised if Apple is going to make a comeback.
So there you go. Even Tom Lee likes Apple. I just find it really funny that CNBC is always early. Let's just put it that way. Now, I told you guys in the last video, again, go back and watch it, that I would not be surprised if Tesla swept these lows here and took out these lows at 300 before any sort of move higher. It was a lot worse than that. Trump and Elon went at it again because Elon is, in my opinion, rightfully criticizing the big beautiful bill, saying, hey, I ripped my hair out trying to save money for the government, trying to cut spending, and now all you're doing is greenlighting an additional $4 to $5 trillion in the deficit. Like, why? What sense does that make? So Elon went back at Trump as the bill was on the Senate floor getting ready for a vote. Now, I thought that Elon would quiet down and that Trump would quiet down and that the dead dogs would lie. The drama did heat up for a brief day with Trump saying that he's going to look into potentially deporting Elon Musk or stripping him of his citizenship, or even cutting off subsidies to his companies. Now, I did look into this and I find it interesting. I thought Tesla really, their subsidy value was a lot higher. Tesla is not even in the top 15 of companies in the United States that benefit from government subsidies. Actually, Boeing is number 1, Amazon is number 2, Intel is number 3, and then you have other car companies, Ford and General Motors. They really benefit 3 times as much as Tesla does off of government subsidies. Tesla's all the way down here at 16 with 2.8 billion in government subsidy value. So Elon just went back at Trump and said, cut it all if you want. I don't care. We don't need government subsidies. We'll be fine. Sales are on an uptick. And just like that, Tesla actually today came out with deliveries. Now, initially their deliveries were a lot higher expected, and then the estimate was cut back, but then they actually beat the revised down estimate. So it was higher, it was revised down, and then Tesla then beat the revised estimate. Now, this is a lot worse than Q2 2024 when they delivered 444,000. But I guess the market liked it as Tesla was up 5%, right back to where we were just a few days ago. Now, I took the opportunity on that drop yesterday to sell the 230 cash secure puts, as I told you I was going to do in my last video. But when we got that drop, these 230 puts were paying $400. So I sold a bunch of these 230 puts. If I get assigned, I'll be buying Tesla at 230, which is way less than here. Those 230 puts are now up 40%. In full disclosure, I'm still down on my July 25th calls. I had the 340 calls expiring July 25th. I still have those. Those are down, and I'm going to be rolling those into August, because if we can close above this gap here on Tesla, above 316, then I think that we can continue our momentum to those equal highs that I talked about at around 367. So that's where we're at with Tesla. I think the story is still very much about robotaxi and not really about car sales anymore. That's clear. The market only at this point cares about robotaxi updates and whether him and the president are going at it. That's what the price action seems to indicate. IWM, which is the Russell 2000, another stock that I gave you guys. I gave you guys this, I think, in May, and told you that if we get the big, beautiful bill signed, that small caps will benefit disproportionately, and we will see all-time highs or near all-time highs on the Russell 2000. We did hit that gap that I indicated. I did close my calls once we filled this gap, but I do expect small caps to have a good summer if the big beautiful bill is signed. Did not get the confirmation yet on gold. Like I said, gold is still holding this trend line perfectly, but I wanted to see if we get a confirmation of a market structure break. Didn't get that yet, so not in a gold short. I still think Amazon is a buy here, and it is going to go to all-time high, especially if the tariff issue is seen as cleared. And in terms of the stock market itself, man, I really would like to see a pullback. We have left so many gaps here that is very, I would say, uncharacteristic for the S&P 500. And, you know, we have done this recently. Obviously, when we have big events like the election, you tend to see a filling of these gaps months later. So, you know, I do think that seasonally, July is one of the best months in the stock market. And oddly enough, August and September are two of the worst months in the stock market. So, you know, it does make sense if we follow a similar trend here to where towards August or September, we start getting a decline to fill some of these gaps here. I would love a pullback. I think it would be very healthy. When we signed the tax cuts in 2017, this was the price action that took us to about the beginning of February. So from December 2017 to February 2018, this right here is what happened right after the initial tax cuts were signed, and then we had a sell the news event. So I'm expecting something similar here come August, September time. Obviously, I will keep you guys updated. So if you want to trade live with me every day, link is in the description below. If you want access to every single trade that I'm making in real time, you want access to all of my long-term analysis, that link is also in the description. Not only do I go live on video live stream every single morning, but I'm also in the chat all day, answering your guys' questions, giving you guys updates, and we are in there to help each other out. So click the link in the description and come and join us. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.